Good morning, good afternoon, good evening, and welcome to our 330th weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. And so the way this call works is this is an AMA, meaning Ask Me Anything, like you see on Reddit. You can ask me business questions, you can ask me career questions, investing questions, personal growth questions, etc. And my humble goal is to help you take your career, your happiness, your business, etc. to the next level. Without further ado, let's begin. Quick housekeeping note. I asked everybody last week if you wanted me to use a virtual background, and most people voted yes. If you like this background, if you want me to change it, let me know. Or if you want me to go back to blue the way it was before, let me know as well. This is your time. All right, let me get started with the first question here. All right, so first up, Tony, it's been a while. Good to see you. You wrote, Dear Chris, what was your one or some setbacks in life that challenged you the most, and how did you overcome them? Yeah, I would say it's confidence. You know, it's like the Rodin sculpture, and you guys know how I love to teach with props. I think, therefore I am, right? It's so true. And you are always your own biggest enemy. Whether or not you think you can do it, you're right. And so my confidence was really shot when I was younger. And I remember when I got my first job on Wall Street at Goldman Sachs in my 20s, I went through the training program and I was so scared. And I thought to myself, if I say something, they'll know I'm dumb, right? If I say nothing, they'll just think I'm dumb. And then I got more confidence. You know, I started going to church even more, putting my faith in God. And I realized that all these people around me were no better than me. And I say that humbly. And I want you all to believe the same thing. And as a teacher or a parent or a boss, your number one goal should be instilling a good sense of confidence in the people that work with you, your kids, etc. Because with confidence, you can do anything. Think about it. It's kind of like when you ask somebody out on a date. If you're not confident, they see right through you, it doesn't work out. And so you got to tell yourself before that big presentation or asking somebody out on a date or a big sales call, you got to tell yourself, I don't really care how this goes. And I'm not saying to be rude or disingenuous, but I'm just saying to be you. You be you. You do you. Everybody loves you for who you are. So just be yourself, because as Dr. Seuss said, everybody else is taken. So confidence is the biggest factor that stops us from reaching our life to its full potential. And I'm going to show you a stupid graph. I've shown you guys this before, but it's the most important graph you'll ever see. All right. So, and I think I'll switch over to this camera angle here, but this will change everything for you, eh? All right, so this here is your age, okay, the x-axis for those listening on Spotify. And on the y-axis is give a damn. And when you're younger, you're down here, okay? You don't care what people think. And when you're older, you're down here. You also don't care what people think. The problem is when you're in the middle, teenager, 20s, 30s, 40s, 50s even, you're up here. You give a damn what people think of you. And this is a deadly, deadly place to live. You'll never reach your full potential if you live up here because you're spending your entire life judging yourself. And as Les Brown said, someone else's opinion of you does not have to become your reality. Think about it. If you're a professional athlete and you've got 50,000 fans in the stands and millions on TV watching you, and all you're thinking about is what are other people thinking of you? You're not going to be at the top of your game. You got to tell yourself, I don't care. And again, I'm not saying be rude or disingenuous. Now, you got to live at this level down here. And this is where the best entrepreneurs live, right here. They don't care. Like Steve Jobs, for example, he didn't care what people thought of the way he dressed. And I think he worked at Activision, and he didn't shower for ages, apparently. And they asked him to come in to work the night shift. I'm not saying don't shower, you have to. But I'm saying you just have to stop caring what people think. And then and only then will you live your life to its full potential. And I was scared of failure too, man. You can't be like that because in business, you only have to be right one time, eh? And so my favorite quote is from Michael Jordan, who is the best basketball player ever, better than LeBron, young kids. That's right. And he said, I failed over and over again in my life, and that's why I succeed. And so you can't fear failure, okay? You can't fear failure. And a lot of times people, the reason they fear failure is because they're worried about what other people will think of them. Everyone else's opinion of you is meaningless. Okay. All right. And then for me, the way I overcame it, so what I did, there was a couple things I was terrified of when I was younger. And I want you all to run to your fears. Whatever you're scared of, run towards it. So for me, it was public speaking. I was terrified because I thought I was dumb, right? And my teachers in school, they destroyed my confidence. They wanted to fail me in the 6th grade and the 8th grade because they thought I had a learning disability. They sent me to a learning disability center on Lakeshore Road in Oakville, Ontario, a place called Chisholm, to see if there was something wrong with me. And it killed me how they destroyed my confidence. And there's nothing wrong with you. God made you the way you are. Okay? Do the best what you got. But for me, I was so scared of public speaking. And here's what I did, and here's what I want you to do. I want you to run to your fears. If it's public speaking, do more of it. Okay? If it's accounting, do more of it and condition yourself to love it. And so in terms of running to my fear, what I humbly did to conquer my fear of public speaking was I went into the prison system. I had a police background check and all that stuff. Yes, I went to jail, folks. And what I did it through St. Vincent de Paul, it's some church organization here in Redwood City. And I would go into the prison system and I would help these inmates. And these poor inmates is usually like somebody their kids are like 20 or 25 years old with a deadbeat father. It's not their fault. And what I would do is I would go in and just talk to the inmates. And then one day, and this is not going to be a religious thing here, although I'm deeply religious. Okay, there's only one God. But I went into the prison system, the McGuire Correctional Facility in Redwood City. And it was on a Sunday. And the priest didn't show up, right? And so the warden called my name. He said, Haroun. I was like, Haroun, present. He said, Father Michael's not here today. You have to go in and conduct mass. And I'm like, well, dude, I'm not a priest. Like, what the heck? I'm just here to help, eh? And he said, no, it's really easy. You just read this pamphlet. Okay, it's the first reading, second reading, gospel, whatever. And then the way it works in religious institutions, as y'all know, is the priest, rabbi, or whatever, what they do is they read from the scripture and then they give a speech. And they've got all week to prepare for this. And so I didn't have all week to prepare for this. I had to do it on the spot. And so what happened was this. I'm standing up there, okay, and scared as hell. And there's 30 inmates in a room all wearing orange jumpsuits. And they're sitting there like this. They're all skeptical, eh? And some of them had tattoos saying F you across their face even, right? Their mustache. I'll never forget that. I was terrified. And so I was reading from this paper. And by the way, when you're up there giving a presentation, if you feel nervous and you think you're shaking, you're not. Nobody can tell. And the gospel reading was about faith, confidence, hope, etc. And so I had to give a speech after that. I'm like, dude, what do I do? I've got 30 people in front of me, that don't like me. I'm scared. And it was at that moment my life changed. Because what I said to the inmates was this. Do you believe in God? And, they said, yeah. And then I said, well, does God believe in you? And they were like, yeah. And then I said this. Well, if you don't believe in yourself, then you might have to question your faith. And we're never questioning our faith. And then the inmates' arms uncrossed, and they're like, makes sense. And by running to my fear, I was able to conquer it as well. And so I want all of you to run to your fear as well. And just understand that a lot of times it's not work that kills us, it's worry, eh? And things are never as bad as you think. And I want you all to live in the moment and be happy today. Don't you want to be happy? And I don't want you to worry about the past because you can't control it. And I don't want you to stress over the future too much because God already knows what's going to happen. That should put you at ease, eh? And I'll finish this question with a great quote from Winston Churchill. He said this. I once met a man on his deathbed who talked about all the worries he had in his life, none of which came true. Okay. All right, next up, Tony wrote, thank you for your courses in finance. Great job. Thank you. Appreciate it. Excellent. And if anybody wants to share wins, please do so. I've got over 2 million, humbly, over 2 million paying students in every country. Tons of my students have gotten jobs and all that stuff. It's why I do what I do. I just want to help. Okay. All right, next up, Life wrote, hope you're doing well. Good to see you too. The Trump government is planning to tax the outsourcing in the IT sector and nudging big techs to hire locally. Won't this increase operational costs and kill profits? What's your take on this? Yeah, if that happens, it will be just terrible for a lot of companies. So for example, for me, what I do is I outsource a lot of stuff. I don't have any full-time employees. I don't believe in that. I run an S corporation, and then I have a lot of contractors. So what I do is I outsource a lot of stuff to the Philippines. And I have a team of 6 in the Philippines that work 24 hours a day, 7 days a week for me. Right? They're great. I love them. They're family. But I pay them literally $1.50 an hour for the team of 6, not each. And so if that were to happen, then what would happen is, this is an income statement, my general and administrative expenses would go up a lot, which would make my net income go down. So this would be an absolute disaster if this happened. I'd be surprised if it goes through. Yeah. All right. And if it happens, it'll lead to higher expenses, and I'll have to pass on people have to pass on the increase in costs to their consumers. And then that leads to inflation, which means higher interest rates. And I guess you all saw yesterday the Federal Reserve cut interest rates by 25 basis points, and people are expecting 2 more rate cuts. I expect questions on this today. The reason they did it was because the labor market's getting a little bit worse. Okay. All right, next question I've got here. Could you show me how a stop loss order works by giving a concrete example with either a real or hypothetical stock, including the rules or logic behind setting it? Yeah, absolutely. So as I do this, I want to talk about long-term investing. Okay, I'll do this very quick and I'll show you a real example. All right. So when you invest in a stock, I want you to look at qualitative research, quantitative research, and financial research. Okay, and this is one of the templates I give my clients. And once you fill this in for any company, you're going to get an executive summary. Okay, and this is just dummy data here. And I want you to always look at fundamentals first, okay? Then valuation second, and a distant third is technical analysis, okay? Now what I'll do, per your question, is I will show you a real example. This is fun. All right, so let me go over here to finance.yahoo.com, and let's look at a stock most people own called Nvidia. All right, and let me go to chat. That's how you say it in South Boston. Okay, good. And what I'll do is I'll look at year to date, and then I will, looks like they changed the outline of this. Okay. So what I'll do is I'm going to show you here a trend line. Give me 1 second, guys. I'm so sorry about this, but they just changed how this works. They used to have indicators you can add right here. All right, hold on 1 second. I can't see it anymore. Okay, so I'll just walk through it and wing it. Okay, so with this chart here, you can see down here you've got the relative strength index, okay, the RSI, which some people call the retail sales index. The relative strength index, there's 2 of them for some reason, ignore that though. Okay, and you can see here the relative strength index, it bottomed here at about 20 for Nvidia and 80 here on the upside. So whenever a stock has a relative strength index of about 20 to 30 or so, it means too many people are selling it. And if you're a contrarian, which you should be, and if you like the fundamentals and valuation of the company, then buy. And if we go back here to April, okay, when Trump first announced tariffs, everyone was freaking out, and the VIX at that point was above 60. That's the time to buy. That's when you accumulate a long-term position, okay? And then typically when it's 80, some people sell. Okay, I'm a very long-term investor. Now, when it comes to stop losses in general, what some people do is they look at the 50 and 200-day moving average. Okay, and what I'm going to do is I'm just go over here to Excel Hell and show you this example here. Okay. All right, so right here, we've got a trend line. Okay, so up here, you've got the 50-day moving average. Here's the 200-day moving average. So if a stock were to violate this moving average, okay, then you might consider that a stop loss if it breaks down, say, 5 or 10% through it. Okay, this is voodoo crap. I don't agree with it, but I'm trying to teach you how the market looks at this. Okay, what you can also do is when it comes to stop losses, you can look at the 200-day moving average. Now, when the 50-day moving average crosses below the 200-day moving average, that's called a death cross, and a lot of people panic and sell. And vice versa, when the 50-day moving average goes up through the 200-day moving average, that's called a golden cross. And some traders or short-term ill-advised investors, they'll start to buy. Okay, so that's what they look at. And they look at trend lines as well. So in this case, if I were to draw a line here and it breaks down through the trend line materially, you might sell. Now, I look at it a little bit differently. Whenever I invest in stocks, I look at risk versus reward. The risk is the downside, the reward is the upside. For me, the upside target price, and obviously you want the upside to be higher, the upside target price is predicated on my 5-year price target. And I price that based on my earnings estimate in 5 years. I've walked through how I calculate that in previous webcasts. If you want me to reiterate that, let me know. And usually the downside for me is a level where I could never see the stock go through, like maybe book value or trading at a massive discount to the peer group. So I hope that answers your question. But I want you all to be very, very long-term focused, please, because day trading does not work. That's right. Otherwise, we'd be able to name very successful day traders, of which none exist. And many day traders panicked in April when Trump was talking about tariffs, and they sold everything. And it was a disaster. Be long-term focused always, please. I put my reputation on the line in this, and I love my students, and I care. Okay? All right. People hate me for saying that sometimes, but I do care. I say it with love in my heart. All right, next up, I've got, do you think that some of these companies don't have a chance to be successful in the future because of trends or else? Yeah. You mentioned Spotify, HubSpot, Unity, Roblox, Canva, UiPath. Yeah, I'll do that in reverse order. Automation, UiPath. I believe in automation longer term. I use Zapier a lot. I love it. Canva in terms of online marketing and whatnot. I'm bullish on that in the long run. Roblox, not as close to it. My kids used to love playing that. I'm bullish on long-term gaming. Same thing with Unity. HubSpot, CRM, whatnot. A little bit worried only because AI I think is going to take share, kind of like what we're seeing right now with Salesforce.com, ticker CRM. And then Spotify, longer term, I'm bullish. I think that they kind of they're the strongest player in the music market, and I love their podcast service as well, especially Joe Rogan, which I listen to all the time. But don't take it from me. What I want you to do when you invest in a company, when you do your investment research, is I want you to always look at 100 steps. Okay, and the 100 steps are as follows, which I showed you a second ago. And what I also want you to do is I want you to ask yourself one basic question before doing any investment research on a company, which is this. In 5 years, will this company be more relevant or less relevant than it is today? That's where you start. And the reason I want you to do that is because I don't want you to get seduced into buying stocks that are cheap for a reason. And I want you to be very long-term focused because all of us, myself included, we've made the cardinal sin of investing, which is selling something we love because it went down. And as Warren Buffett said, the New York Stock Exchange is the only store in the world where consumers sell stuff and it goes on sale. Let me change the backdrop here. And I want you to do your own research, please. I don't want you to rely on me or anybody. If I give you a fish, you'll eat for a day. If I teach you how to fish, you'll eat for a lifetime. And the worst thing you can do is go to an online forum and watch a video or watch on television somebody that speaks gooder than us, than me at least, and sounds confident, and you buy a stock because of them. They're talking their book. Any money manager that's being interviewed in television will talk about stocks that they love, that they own as well, for obvious reasons. And the same thing with CEOs. And one of the biggest mistakes I made early in my career was meeting with a CEO or watching a CEO present and then buying the stock. They're the best salespeople in the world. That's how they got there. It's Darwinism. Always do your own research. Yeah. And be long-term focused too, of course. All right, let me switch back to night mode. Okay. All right. How often does it happen to you that you use your stop loss and it isn't it the moment to buy instead of sell if you believe in the fundamentals? Yeah. So for me, I'm a little bit different. Okay. So stop losses for me are a little bit different. So what I like to look at is risk reward. Okay. And I only like to invest in stocks where I humbly believe it's a 5x5, meaning a 500% upside in 5 years. Am I often wrong? Almost always. But if I do my research, meaning the 100 steps I showed you in my spreadsheet, and I see 500% upside and I invest and it's only a 2 or 3 bagger, I'm pretty happy. And the good thing about doing your own investment research as well, detailed research, and document everything, is that you're not going to panic. You'll be a long-term investor. And what I love to do, and I never make a position more than 5% of my portfolio, okay? And I don't think anybody on this call should either. But when I start buying a new position, I immediately put on 25 basis points, meaning 0.25% of 5%. And I hope it goes down. I know it's a weird thing to say. You're saying, Chris, you hope you lose money? That's right. So I can scale it to a full position. But usually I see massive upside. Massive upside. And if you do investment research on a stock and you see 15% upside, each year, you're wasting your time. Just buy the S&P 500. But if you do investment research on a company where you see and you think it's a 5x5, and usually that means not a large cap, then you can make that part of your portfolio. Now, in terms of diversification, I mentioned the 5% rule. I also believe that you should not have more than 20% of your portfolio in any one particular sector, like technology, retail, healthcare, industrial, cyclicals, etc. Yeah. All right, let me move on now to the next question. All right, for established industrial giants like Komatsu and Caterpillar, etc., do you wait for a month when there's zero profitability, or do you look at the annual results? Can you give an example from the past? Yeah, absolutely. So this is going to sound really out there, okay? But industrial companies like Caterpillar and Komatsu, which compete with each other, they're very much tied to global GDP. And you usually want to buy these stocks when they're not profitable. What? It's the best time. You don't buy them when you see, oh my God, the P is only 7 times. Because they're at the peak of the economic cycle and usually GDP is on fire. You want to buy when GDP growth is negative and when they don't have profits. Now, there's hardly any other sectors where you do it that way. But with industrial stocks, this is how it works. Now, if you're not sure how to value the company, then you can look at previous cycles. And when GDP globally is negative for ticker CAT and Komatsu in Japan on Nikkei, when GDP growth globally is negative and these companies are not profitable, you want to look at the price to revenue multiple and see what they bottomed at in previous economic cycles. I have a very good friend who launched a multi-billion-dollar hedge fund. I worked with him for years, a couple of years ago. I can't disclose who he is, sorry. And he's the best semiconductor investor on the planet. And years ago, he taught me, and this is before the AI craze, but years ago, he taught me that with semiconductor stocks, the simple time to buy them is when you see the price to revenue, or EV to sales. I can talk about that too if you want me to. When you see the price to revenue troughs. And you look at previous economic cycles to see when did price to revenue trough, right? And this is for CapEx intensive companies like AMAT or ASML, pronounced ASML. Okay. All right, let's move on here. All right, next question is, do you buy promising companies near IPO through Equizen or another platform? Yeah. It doesn't really matter what platform you use. Just make sure that it's a well-known brand that governments would never let go under. So there are certain banks that are too big to fail. So what you want to do in the United States, and maybe other countries too, is just do a search for the top 5 banks in the country and invest through them. Okay, call each. What you do is you call each of those the banks and you say, hey, can you transfer me to your stock investment securities division? They transfer you, and then you say, what is the commission for buying a stock? Call all 5, whatever is lowest. That's what you do. But before you invest in an IPO, what I want you to do, and this is where the green screen messes up. Let me use a different angle here. What I want you to do is I want you to read the entire S1 document, okay? And this is like the annual report, but thicker and better, made by investment bankers, as well as accountants and lawyers and stuff. And I want you to create your own research report on the company. Okay, so I invested in Facebook and Palantir pre-IPO, did a ton of research. I didn't have access to this. You do, though. Don't ever invest in an IPO without reading the entire S1, okay? And what I want you to do also is I want you to make your own report using the template I showed you earlier, 100 steps to analyze the company. And I want you to forecast the financial statements as well, 5 or 10 years in the future, because quite often a lot of these companies, especially in the tech sector, when they go public, quite often they're not profitable, but they will be, I think. Do your own research, and by law, the great thing about the SEC, okay, and I can criticize them forever too, but the great thing is that they mandate that companies list all this stuff. Don't ever invest in a stock, private company, or anything unless you get the investment offering memorandum first, please. And we do a case study on this and many other companies in my program. All right, let me go back to night mode. Here we go. All right, cool. All right, next question I've got here is, when can a 300 plus PE be justified? Yeah. I don't really care what a stock's PE is this year or next year. It's irrelevant to me. All I give a damn about is what I think the PE should be in 5 years. So when tech stocks go public, right, a lot of companies go public, they're not profitable. And one of the reasons is because they're spending a lot of money on research and development, right, to create cool new products, or they're spending a lot of money on sales and marketing to distribute the stuff, or they're opening offices overseas. And I don't care about net income in the first year or two when a company goes public. All I care about is net income in 5 years. And this is how the smart money does it. Hedge funds that do well, they think like that as well. They value the company based on what they think earnings can be several years in the future. Now, you might look at a stock and say, this is crazy. It's 300 times earnings. I'm going to short it. Well, maybe the reason it's 300 times earnings is because they're spending a lot of money on R&D to create the best product ever. Let's go back in time. Let's go back to 2020. And let's say Jensen Huang from Nvidia saw the writing on the wall with respect to OpenAI. And he thought to himself, I'm going to hurt my profits in the near term so I can make the best damn graphics cards so that when OpenAI launches, etc., publicly in 2022 or whatever it was, when they launch publicly, I'm going to own the market. Isn't that a smart idea? Even though that would hurt profits near term? You gotta think long term like that. And the way you're going to do it in your financial model, which is how I teach you, is this is an income statement. You're going to spend most of your time forecasting revenue. Okay? How do you do that? Well, you look at the historical financial statements, and I'm really going to oversimplify this, okay? And if revenue growth in the past 5 years was this, what's it going to be next year? Well, an object in motion stays in motion. I know that's simple, okay? And then spend most of your time forecasting revenue. Then what you're going to do is the red items here, for the most part, are a percent of revenue. So what percent of revenue was cost of goods sold in the past? Well, it was this, and it's starting to go down, and here's the present. So what's it going to be in the future? Well, probably here. Done. All right, now we know gross profit. What about sales and marketing? And the reason we're doing this is to come up with net income so we can value the company on a PE basis. What about operating expenses, the expenses to operate the business? Well, sales and marketing was, I don't know, it was 15% 5 years ago. Then it went to 14.5%. Then it went to 13.5, 13, etc. What's it going to be in the future? You probably cut off 50 basis points as well. Okay. That sort of thing. Done. You do the rest with these. These are a little bit different. I can talk about these if you want me to. Never forecast taxes. Just use the historical tax rate. And then you've got net income. Great. So now you can value the company based on your earnings estimates in 5 years. Well, what target price should I use 5 years from now for a stock? What I recommend doing is this. So I'm going to oversimplify this. But the S&P 500, historically, this is very rough, okay? Trades at 15 times earnings and has 15% earnings growth. Okay, a P of 15 divided by 15% growth earnings, that's 1. Okay, makes sense, good. So if a company in the S&P 500 has earnings growth that's lower than 15%, say 10%, then it should trade at 10 times. Well, if a company in the S&P 500 has earnings growth of 20%, well, it should trade at 20 times earnings. What does this have to do with the target price in 5 years? Well, if you forecast your financial statements out 5 years, okay, and if between years 4 and 5, you have earnings per share, net income, you have earnings per share, net income, growing at 20% between year 4 and year 5. And let's say you're forecasting $1 in earnings in year 5, growing 20%. So that means in 5 years, this stock you're doing research on should trade at 20 times that $1, $20 target price. That's how you have to think. As Warren Buffett said, the longer the view, the wiser the intention. And when Warren Buffett does investment research on a stock and he buys it, like he bought Coca-Cola around 1990, he always assumes the market's going to be closed for at least 10 years. You need to be long-term focused like that. It's the only way to invest. Otherwise, you'll make the cardinal sin of selling it when it goes down. And we don't sell stuff we love when it goes down. If Nintendo came out with Super Mario Odyssey 2, which I can't wait for, and I just finished Donkey Kong Bonanza with my kids. Actually, it was mostly me. I loved it. Masterpiece. But if Nintendo came out with Super Mario Odyssey 2, and the price was $60 to buy it, okay? And you're like, yeah, I love it. Kind of expensive. I don't know if I want to buy it. And they drop the price to $30. Are you going to buy it? Are you more likely to buy it or not? And I know it sounds like a silly example, but I want you to be long-term focused when it comes to stocks as well. Don't check daily stocks, okay? Check them monthly, quarterly, yearly if you can. I know it's hard. Just buy and hold forever. Yeah, unless you do investment research and you decide the stock's not worth holding anymore. All right. Next question is, for a growth company, expansion rates are slowing. Does this mean we are late to get on the train? Yeah. So the way it works for almost all publicly traded companies. So let me first of all talk quickly about venture capital and when companies go public. So companies are private and venture capital invests in them. And revenue growth is usually accelerating, okay? And then the second that revenue growth is positive but starting to decelerate, the venture capitalists call their investment banking buddies in New York and say, hey, take this public. Then the company goes public. And for almost all companies that are publicly traded, revenue growth is actually decelerating. Okay? Look it up for almost all companies. So don't freak out if a company has revenue growth that's publicly traded of 50% and it goes down to 45% the next year. That's okay, right? And you get, it's the law of large numbers. Sometimes big companies can't grow. That's why the U.S. economy will never grow more than a couple percent. Just very big, biggest company on the planet. So don't worry if growth slows. What you want to worry about, though, if growth slows too much and it's only, say, 5%, and the only people that own that stock are growth investors. There's two camps of investors. It's important. There's growth investors. People like to buy expensive stuff growing fast. And value investors. People like to buy cheap stuff like Warren Buffett. All growth stocks become a value stock eventually. Don't ever buy a stock that's stuck in the middle, okay, that's transitioning from growth to value. And the reason is because most people are either growth investors or value investors. They're not in the middle. And when a company transitions from growth to value, it's what's called, what I've coined as investment purgatory. It's not growing fast enough for growth investors to buy it. It's not cheap enough for value investors to buy it. And it can be stuck there for many years. And the only way to get it to go quickly from growth to value is if an activist investor like Carl Icahn comes in. So just be very, very careful with that. And if you have follow-up questions about this, by all means, please let me know. Thank you. All right, let me change to another background here just for fun. Mix it up. Here we go. Okay. If you decide to get rid of a stock in the next 6 months, what would be your steps? Yeah. So a couple things. Number one, you never want to invest in a stock that's illiquid, because as hedge funds learned in the fall of 2008, illiquid stocks own you in a down market rather than vice versa. What does that mean? How do I put this into practice? Well, never buy more than 10% of the average daily trading volume of a stock. Never own that much so that you can get out quickly if need be. Now, if a company hits my target price, I don't tell myself I'm getting out within 6 months. I just sell it. That's it. If a company hits my stop loss, if I use a stop loss, that is, I don't overthink. I just sell it. I just get out. So how do you know when to panic sell a stock? Well, here's how you know. What you do first is this. Okay, you're going to do an investment write-up on the stock. Okay, so use my framework here, do qualitative research, quantitative financial research. Answer all the questions, value the company, and you'll get a massive detailed report as well as an executive summary. This is dummy data here. All right, so you did the research. Now you own the stock. Okay, and let's say 6 months in the future, something terrible, as Charles Barkley says, something terrible happens and the stock goes down. I want you to go back in time and hold that one pager you made and think to yourself, okay, the stock is down a lot because of a new news release. If I had known about that news release when I made my investment write-up 6 months ago, would I have still bought the stock? If the answer is yes, buy more if it's not a full position. If the answer is no, don't be emotional. Sell it. Move on. Yeah. I hope that answers your question. Thanks. Yeah. Now, you got to be careful with taxes too. So if you own a stock and you're profiting on it and you want to sell it, if it's in your retirement savings account, taxes don't really matter. But if you want to sell a stock and you're like, dude, I made so much money on this, but if I sell, I'm going to pay a lot of taxes. What do I do? Well, what you can do, let's say it's December 20th, and you don't want to pay taxes on it. Well, what you can do is this. Say you own Coca-Cola, ticker KO, and it's up a ton, but you have to sell it for whatever you want to sell for whatever reason. What you can do is not sell it and buy a put. A put is like an insurance policy, okay? So if Coke goes down a lot and you own a put, your put will make money and vice versa. A lot of people do that for tax strategy reasons. All right, let me switch over to the next question. All right. How do you get the tax rate when you're doing financial modeling? Yeah. So don't forecast taxes, okay? It's too hard. What you can always do is just figure out what their tax rate has been for the past 4 quarters and use that going forward. Now, the exception to that are 2 things. Number one, if on the quarterly earnings call, the company talks about the tax rate going forward, right? They give guidance, which is usually not the case. And it's usually when a sell-side analyst asks a question. Or if you see it in one of the regulatory filings, like 10K or the 10Q. And when you do investment research on regulatory filings, what I want you to do is I want you to really understand footnotes, okay? Now, I have a product that my clients get. You can go to the link in the description of this video if you care for more details, where I help you to analyze every aspect of the financial statements of a company, including footnotes. And we use AI for this as well, tons of AI. And you enter in the company name, and then you have a 1-page executive summary you can print out, bring it to your interview, show your boss, whatever, okay? And then there's also a massive detailed report. But you got to read the footnotes. Okay, the footnotes in financial statements, like the annual report. It's kind of like, when you write a paper at school and you have the number 1 beside a sentence, and then you have a footnote. It's the exact same thing. And you can't just look at the financial statements in a nutshell. You have to look at the footnotes. Why? Because the footnotes give you a lot more details on the stock. For example, you could have a footnote for a balance sheet entry on debt. In the footnotes, in most companies, in their 10K, their annual report, will provide a footnote that will tell you how much cash is coming due, meaning debt, in the next 5 years. You can't see that just by looking at the financial statements. So always look at the footnotes, which I explain in detail in that course. Typing values from the SEC reports in Excel leads to a lot of room for mistakes. How do you minimize that? Do you print the financial reports? Do you split the screen when you type them? Any tips? Yeah. So what I used to do it was always a race, right? I worked at a certain hedge fund where the bulk of after-hours trading was us, right? Just if a company beat earnings by a lot, we buy more and vice versa. So what I used to do is I would go to the 8K when the press release comes out for earnings. Okay? And then I would look at pro forma, meaning non-GAAP earnings, and I'd enter it into my financial statements as fast as I could. And what that does, along with the new guidance range, if they give it, is it helps me understand what my target price or earnings estimates are 5 years from now, so I can adjust, either buy more after hours if it's liquid enough or vice versa. That's how I do it. Now, what some people do, and you always want to go right to the source. Don't ever use a website like Yahoo Finance to get financials. Go right to the source, meaning sec.gov. Now, what some people do, and there's plenty of websites like this now, is they go to a website called bamsec.com. And you can subscribe here, and you can download all financial reports directly into Excel. Okay, and this way you don't have to type them yourself. So, for example, here, if I click here on the 10K, and we go down here to, I don't know, see if I can find a financial statement here somewhere. Hold on a second. And you scroll down here to financial statements and supplemental data. Right here, this is for Apple. Right here. Okay, you see this right here? What you can do, and this is their income statement, okay, you can click download and download it into Excel at a website called BAMSEC. If you want, you can get a 30-day trial, and then don't cancel it and use a different email address for another 30-day trial. Yeah. All right, so let me move on to the next question. I just turned 20, Malcolm, I just turned 20 a couple days ago. Congratulations, nice. I sold my mutual fund and opened my first brokerage account today. Good that you sold your mutual funds. Here's why. Okay, and before you guys sell, make sure to check with your account for tax reasons, whatever. Mutual funds are a scam. I've been saying this for years. With mutual funds, sometimes you pay, including hidden fees, 3 to 5% of fees every year. With ETFs, not only do you outperform those mutual funds, but you might pay 3 pennies per year, meaning 0.03%. Do your research first, of course. All right, so sold my mutual fund, opened my first account today. Nice. Chris, I wouldn't have made this decision if it weren't for you. I'm extremely thankful. God bless you and thank you. Thank you. That's why I do what I do. And then Ray wrote, thanks for clearing the skies for us. My pleasure. My pleasure. Yeah. When one teaches, two learn. All right. Okay. Malcolm wrote, at 20 years old, I have a large time horizon. Yes. Should I be focused on mostly growth, less satellite stocks, and shift towards income later in life? Thank you. Yeah. Yes, focus on growth, without a doubt. So the way it works, and this is an old school private wealth management idea, is you take 100 minus your age. You take 100 minus your age. So you're 20. So 100 minus 20 is 80. That means 80% of your portfolio should be in growth stocks after you've done your research. Okay, and 20% in value stocks or high dividend yielding, really safe companies or AAA rated bonds. Now, if you're 95, 100 minus 95 is 5. That means 5% of your portfolio should be in growth stocks and 95% in the lower risk stuff because you don't have as much time to make it back. It's old school because I think there are people on this webcast that will live to 150 years old. In fact, the average life expectancy today is 26 years longer than it was in the 1950s. So you're all 26 years younger than you are, except for you, you're 20. I don't want to, yeah. The math doesn't always work, yeah. But you certainly can take risks. But make sure, Malcolm, before you take risks, I want you to do an investment write-up on each company using my template if you want, or somebody else's, I don't care. I just want to help you. So that you're a long-term investor, okay? Always, yeah. And then never have more than 5% of your portfolio in any one company. ETFs, you can go a bit bigger. And try not to have 20% of your portfolio exposed to one particular sector, yeah. Now, if you're outside the United States, also be careful of US dollar exposure. Yeah. Okay. All right, next up, I've got Alexandra, who wrote, can you tell something about US manufacturing and Trump tariff impact on it? I'm highly confused. Yeah. Yeah. So my dad told me several years ago, when it comes to Donald Trump, don't focus on what he says, focus on what he does. I don't think things are going to be as bad as we think when it comes to tariffs. Okay? He is, love him or hate him, it is what it is. He's the best negotiator on the planet. Usually when two people are negotiating, you know, one party says, I want this, other party says, I want this. With Trump, he says, I want this, other party says, I want this. They meet here. Yeah. So I'm not as worried. Things are never as bad as we think. I promise you. Okay. And I want to bring up very gently Jimmy Kimmel and what happened. So you all see the same news that I see. And with a lot of my clients, when I help them with their LinkedIn profile, and if you want to be a client, go to the link in the description, set up a call with my team. But I write your entire LinkedIn profile, help you network, get a job, whatever, all that stuff. But a lot of times with my clients, I see that they follow politicians on LinkedIn. You never do that. You never want to let people know your political affiliation. It's deadly. Okay? I don't want you to follow politicians on your LinkedIn profile because half the people will like you more than the other half. I don't know what half. I also don't want you to follow anybody that is a business person that leans extremely left or extremely right. For example, don't follow Elon Musk because he leans too right. He leans right. Don't follow Mark Cuban because he leans left. You know what I'm saying? Don't follow Michael Bloomberg because he's Democrat. Don't follow John Smith or whoever it is because he or she is Republican. Don't let anybody know your political affiliations. We live in interesting times. Frightening, actually. If you express an opinion that leads people to believe that you follow one political side of the spectrum, you can lose your job. Keep that private. And for your family as well. And so with my kids, you know, I told them, you can see right through them, green screen. But I told them, you never let anybody know ever what your political affiliation is. That hurt my arm. Look at that. Ouch. Yeah, I should fix that. I think I have it fixed on this screen here. Okay, good. But I do believe in freedom of speech. Yeah. But I don't believe in freedom of hate speech. Something's got to be regulated. I'm going to go there. So I use TikTok. I love it, right? I get to see Dave Chappelle doing funny stuff. He's hilarious for me. But the problem is, when I read through the comments on TikTok, it is frightening. It is frightening what that app has done to this country. It is so extreme. The amount of hate speech on both sides, it's terrifying. And it has a big impact on what people think as well. And so, look, I believe in freedom of speech, but there's got to be some kind of regulation to stop the madness. And one solution could be this. So Google years ago launched their own social media platform called Google+, and it didn't do well. But when they launched it, at the same time, they changed the rule about giving comments on YouTube. To do comments on YouTube, you have to set up a Gmail account, right? And the hate comments on YouTube are they're really not there compared to other platforms. And so maybe the rule is with TikTok, you have to, I don't know, register an email address or something, or show an email. I don't know. But there's got to be some kind of accountability, because it's tearing this country apart, and it's not going to get any better. Yeah. And my thoughts and prayers are with Charlie Kirk's family. Yeah. Regardless of your political affiliation, what happened is terrible. Yeah. Yeah. All right. All right, next up, Alexander wrote here. Give me 1 second, guys. What are your views on industrial automation? How much portion of low-cost manufacturing products can be automated in the United States that were done in poor countries? Eventually, almost all of it. So a great example of this is, you take a look at BYD, okay, which is the Chinese version of Tesla, which I think is going to be way bigger than Tesla very, very soon in almost every country except North America, actually. So BYD's products are half the price of Tesla's, and they're better. And what BYD has done is they have an army of robots. Think Star Wars, the Clone Wars. An army of robots that produce these things. It's just a matter of time until a lot of this stuff is manufactured using robots and not people. It's going to happen. The trick is, how do you do it at low enough cost? So for me, I have, as I mentioned earlier, I have a team of 6 in the Philippines. I pay $1.50 an hour too. Okay, the whole team. And they work 24/7. But I have an AI app that we're testing now that costs $100 a month and does the same thing. If we can get robotics and automation to be cheaper than the cost of labor, then it's just a matter of time. And you might think that's far-fetched. However, back in 1999, McKinsey had this great report that stipulated that every component in a television, cell phone, computer, etc., every component drops in price by 0.6% every week. It's only a matter of time. Yeah. And am I scared that, oh my God, we're not going to have jobs anymore? No. Don't listen to the media. We're going to have more time to spend with our loved ones. We're going to adapt. We always do. Don't forget that, many years ago, close to 100% of the economy was agriculture-based. Then we created machines. Go John Deere. And now it's like a couple percent max. We always adapt. Don't forget that when the internet came out in the 90s, scholars and brains on a stick, kind of like me, except only the stick. But scholars said, oh my goodness, the internet is going to rewire our brains. We're not going to be thinking anymore. It's a downfall of civilization. Didn't happen. Scholars also said when Wikipedia came out in the second half of 2001, oh my God, we're just going to use Wikipedia for research. It's the end of the world. It's not. We always adapt, and we always will. Yeah. And when it comes to AI, if you're worried about your job, I want you to embrace AI so that you're 10 times more productive than everybody else. That's it. Or retrain. Get a new job. Learn online, which costs next to nothing these days. This is my 330th weekly webcast. It's free advice or teaching, humbly, that I've been doing for almost 7 years now. And there's a billion other people way better than me that speak way gooder than me that offer free advice. You can always retrain online. Yeah. All right. Now you're thinking if Haroun was publicly traded, I would short that stock. If you can get a borrow, it's pretty crowded. All right, next question I've got here is, if you were sent back to January 2007 with all the memory and were asked to convert $100 billion, what series of financial instruments would you have used? Okay, so how would I make a lot of money? Yeah. So if I go back to January 2007, think where I was. I worked at a hedge fund called Pequot then. That's when the iPhone was released. Steve Jobs announced it. Okay, so I'd probably buy Leaps. Actually, it might work, but it kind of hurt me in 2008 on Apple. And I'll probably just buy as much Apple as I can using derivative instruments. Very, 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 very long-term focused. Yeah. All right. Next question is, when you were in a hedge fund, did you use technical analysis? Have you ever worked as a day trader for a corporate firm? I've never worked for a corporate firm. I worked at a hedge fund called Citadel, where I learned a ton. I met with Ken Griffin a couple times. The guy's brilliant. One day I spent 30 minutes talking to him one-on-one, and I learned more in that 30 minutes than any 30-minute session I have ever had in my life. And whenever I go into somebody's office that's more successful than me, which is every time I go into somebody's office, what I do is I look at their bookshelf and I buy the books that they have. And so Ken Griffin, I think he had a couple textbooks by Damodarian. He was a professor at NYU. I remember ordering those, but wicked smart guy. Nice guy too. Okay. And I remember at that point, a lot of the code at Citadel was written by him, legacy code. Yeah. So he's, I don't know, he's kind of like Larry Ellison. Like he understands business and tech as well. Smart guy. Yeah. Yeah. In terms of technical analysis, sure, I used it. Yeah. I used it even when I was at Goldman and when I started my own hedge fund, et cetera. I use it just to understand when to enter a position. So I love buying a stock when the relative strength index is like 20. So I always love to buy a broken stock, but not a broken company. What does that mean? Well, a broken stock means a stock that is massively oversold, like the RSI maybe is 20, okay? And it feels like you're catching a falling knife. I love that because nobody else does. And you got to be a contrarian in business, especially when investing. Otherwise, you'll never be successful. And I haven't used a Wayne Gretzky analogy in a while. Let me get rid of this awful green screen. All right. So Wayne Gretzky, who is humbly, he said, the best hockey player in history. So Gretzky he said the reason he was successful is because he doesn't skate to where the puck is, but because he skates to where the puck is going to be. And by the same token, I want you all to invest in stocks that people are going to like. Okay? And when you buy a stock that you love, where the RSI is 20 or 30, whatever it is, meaning massively oversold, nobody else is buying. Doesn't it make sense to buy something when nobody else is buying it? Because if you buy the exact same stock everybody loves within recent, there's not that many, everybody owns it. It's over-owned. There's not that many incremental investors to buy it and push it higher. Yeah. So be a contrarian and watch your net worth take off. All right. Let's do Brooklyn Bridge. Yeah. Let me know if you guys want me to go back to blue screen in the background or you like this background of New York stuff. Yeah. All right. Actually, I have to do GTA 4 background here. Sort of. GTA 6. Yeah. And when GTA 6 comes out in May of 2026, if ever, I'm not doing this webcast for like a month, okay? I'm going to be nerding out and playing that game. Yeah. Because I'm a man-child. Yeah. And a lot of people say, when I retire, I'm going to play golf. Screw that, man. When I retire, which will be never, I'm going to play video games. I love video games. I always have. Okay. All right. All right. So JK wrote here, I like the background. Thank you. Thank you. Okay. All right. Next up, Peter. Hey, Peter. Good to see you, bud. Wrote, I've been trying out OBS, but its green screen is much more sensitive than Zoom's. Is it worth sticking with OBS to tweak it, or would you recommend using something else? Yeah. For those of you who want to do webcasts like I do, I've used OBS as well. So OBS is a free version of this software product, which I'll tell you about in a second. OBS stands for Open Broadcast Software. And the engine of that is used in Twitch and other streaming services. What I use is something called Wirecast. Okay. It's a lot easier to use. It's like $500 or $600 a year. I can't remember now. I'm on subscription. but it's a lot easier to use than OBS. But you can certainly use OBS for green screen as well. The issue with green screen, and I know that you're one of my premium customers. So today in 1 hour at 10 a.m. Pacific time, on our weekly 3-hour and 20-minute Zoom session, I will teach you how to have an amazing green screen. The way it works with green screens in general is you need to have perfect lighting in the background. Okay, so it has to be somewhat even. Okay, and the reason I use blue and not green is because I have green eyes. Thank you, my Irish grandmother. I miss you. I love you. And if I were to use green, you'd see right through me, which you can probably do anyway because I'm a shitty teacher. So I throw blue up here, but the lighting has to be somewhat even behind you in order for you to be able to use green screen. Yeah. All right. Next up, Jiaming. Hey, Jiaming. How are you? Jiaming is one of my clients. He wants to work for a Big Four. He wrote, "Hi, Chris. Always good to see you. Likewise, brother. When analyzing Securities and Exchange Commission filings, SEC filings, like the 8K, and the 8K means an important press release like earnings. What red flag should accounting students pay most attention to if they want to spot fraud?" Yeah, it's a little bit hard to spot fraud. If you want to be able to spot fraud, I would look a little bit more so at the 10K. Okay, and when you look at the 10K, what I want you to do is I want you to open up the forensic financial statement analysis using AI product that I provide you with, and I provide all my clients with, and really focus on the footnotes. Okay, yeah, okay, all right. But the biggest red flags that I see in an 8K usually has to do with the balance sheet. So obviously, if a company reports earnings and they release the 8K and they miss revenue or earnings, or if they guide down, the stock goes down. Yeah. But what I like to really look at is the backlog for future revenue. How do you do that? Well, sometimes a company will report earnings and they beat revenue and earnings and the stock goes down. Why is that? Well, if it doesn't come down to guidance, it could come down to the balance sheet. How? Well, if you look at the liabilities section of the balance sheet, you'll see something called deferred revenues, which means revenues they can't recognize right now, but revenue they can recognize in the future. And if deferred revenue goes down, then it means the pipeline for business sucks or it's getting worse. And quite often the stock goes down because of that. Yeah. All right. All right, let's go back to this one here. I think you can see my coffee right here too. I don't know if that's realistic, but I'm having fun. All right. All right, next question is, what's one mistake you see students make most often in discovery calls or networking pitches? How can they fix it? Yeah. So what I would say is you never, ever, ever want to jump into business, talking business, when you're first meeting somebody, doing a networking or a meeting or whatever it is. Business is about people. Relationships first, product knowledge second. Your network is your net worth. So I want you to bond with people first, always. Okay? And just be yourself. That's why everybody loves you for who you are. Don't try to be somebody else. When you try to be somebody else and you ask somebody out on a date, or you go on a date and you're just trying to act, it doesn't work. You don't get a second date. You won't get a second interview either. Be yourself. And I remember years ago, I was trying to get a job and I was too robotic in interviews. It just wasn't working. And I was so freaking frustrated, man. And so I went to an interview, at a top firm. And I just kind of sat back and I said, you know what, man? Fuck it. I'm just going to be me. And I was just myself. We talked about baseball, talked about the weather, and I didn't really care. I wasn't rude. I was just me. And it worked out. And it worked out again and again and again. Just be yourself, always. Yeah. Remember, bond before business, always. Yeah. Okay. In terms of pitches, when you're trying to raise money. So one mistake I see, and so I worked in venture capital for years. I invested in Facebook, Palantir, pre-IPO, et cetera. But one thing I've seen a lot of startups do is they go to venture capitalists, right? They network to get a meeting. And the venture capitalist does them a favor of giving them a meeting. And before the meeting, the startup dude, guy with his company says, I want you to sign NDA. No. not in the first meeting. Because you're basically saying to the venture capitalist, thank you so much for the meeting. Oh my God, this is great. I don't trust you. You don't have to give away the secret sauce in your first meeting. Yeah, that's usually done later when they send the term sheet, which is not legally binding, and then the lawyers take care of the rest of the paperwork. Yeah. All right, let me move on. All right. What strategies do you recommend for turning a short student club leadership role into a long-term career advantage on LinkedIn or interviews? Yeah. Okay. Yeah. So if anybody's in school right now, what I recommend that you do is this. Okay. The only reason you should go to university is get a good job, right? And I think university is in secular decline. I do. I think my kids are the last generation that think that maybe they should go to university. So if the only reason you go to university is get a good job, then what I want you to do is I want you to set up a student club that helps with that. So for example, say you're a finance student and there's no finance club. Start a finance club. Then what you're going to do is you're going to call finance executives that are graduates from your school and ask them, hey, can you do a Zoom just to present to the finance club? They'll say yes, of course. But you own that relationship. And then you thank them profusely for their time. You impress them. And then you ask them for an internship. Closed mouths don't get fed. Asking you'll receive its prophetic, but intrusive speaking anytime. Next question is from Robert Jordan. Hey, Robert, how are you? Chris, do you have a course or plan to make one on financial advising? I've taken just about all of your courses. Thank you for what you do. I've learned a lot. Thank you so much. I actually do. I do. And I've had clients that have started their own private wealth management firms that raised over $10 million in 6 months, and now are making 7 figures a year. Okay. So what you can do is this. Let me see if I can give you my calendar. Actually, tell you what. Send me an email, Robert. Send me an email to support@harounventures.com. I'll read it. Put your full name in it, and I'll set up a time with you on my calendar. Yeah, which I don't take very many meetings these days, but I'm happy to do it. Yeah. Okay. And then Vuson wrote, nice, told you about the Philippines. Yeah. All right. And do you know Philippines was kind of part of the United States last century? I didn't know that. Huh. Okay. Love the Philippines. Okay, next up, Michael wrote, hey, Chris, I own a growing corrugated manufacturing company. I'm wondering if I should look to make money through investment funds in addition to manufacturing products. Yeah. Yeah, I would keep it completely separate. Yeah, don't invest like on your balance sheet in your company. Like the cash and short-term investments should be stuff that is very safe. You know, like commercial paper or cash or short-term treasuries. Yeah, keep that completely separate, especially if you want to take investors later, because investors hate it when you do that, right? Even with Michael Saylor, and I can go there if you want me to. Okay, from Micro Tragedy. Yeah, and in fact, when you start a company, run a company, investors want to see that you're good at one thing and one thing only. That's what you focus on. Okay, laser focused. Okay, you don't want to be thought of as a jack of all trades and a master of none. And whenever a founder or CEO of a company takes his or her eye off the ball, investors freak out. For example, Elon Musk, when he bought X or Twitter, Tesla, and he was like, oh shoot, I should really focus on that again. He focused on it again. And then Elon Musk, July of last summer, helping with the election. Execution. Okay. It's the same thing when the founder of a company or CEO of a company, buys a sports team. It might be a good short after you do your research, of course. Focus on one thing and one thing only and be the best at it. Yeah. Uh-oh. Politics question. Okay. I'm going to be very careful how I read this, okay? And I'm not going to read it word for word. How did Nancy Pelosi become so rich? Is it insider trading? I don't know how to answer this. Her husband works in finance as well, and apparently he's very successful. I don't know much about that, but if it were up to me, politicians should not be allowed to buy stocks. The only thing they can own is the Vanguard ticker VOO. And they can't buy and sell it while they're in office. They have to be long-term focused. Yeah. That's just my perspective. Yeah. Without telling you which way I lean. Okay. All right. Oh, it's such a joy living on the left coast, west coast. I'm not telling you which way I lean, though. Actually, okay. It depends for me. Sometimes I vote Republican, sometimes I vote Democrat. In the last election, I did not vote. But as a kid growing up in Canada, I loved Ronald Reagan. I loved that he took on big, bad communism, which is filth. Then I came to America. I was like, okay, great. I can vote Republican now. And I can't decide who to vote for, so I don't vote sometimes. Yeah. And when it came to Kamala Harris, oh my God, here I go. This is terrible, Chris. You're doing everything you're not supposed to be doing. One of the things that bothered me was when she said, how dare we say Merry Christmas? Like, you got to keep religion and politics separate, always. Again, I did not vote in the last election. Yeah. All right. Although I have publicly said that I was adamantly against Justin Trudeau in Canada. And my family convinced me not to do what I'm about to tell you. And I almost did it. When Trudeau was Prime Minister of Canada, right, running the country into the ground, breaks my heart as a proud Canadian. I was buying a hat, a red hat I was going to wear in this webcast one week. And my family convinced me not to. Oh my God, here I go. And the red hat said, make Trudeau a drama teacher again. Yeah. If I voted in Canada, I would vote progressive conservative. Although I did work with Mark Carney at Goldman Sachs. We overlapped. He was a different division. Super nice guy. Yeah. Yeah. And the right choice if you have a liberal head in the country. Shut up, Chris. Okay. Time to move on. All right, next question is from Matt, same name of my son as well, who wrote, and Matt is actually, it's Hebrew for gift from God. Yeah, my son Matthew is a gift from God. And my wife said if it was up to me, my kids would be named Matthew, Mark, Luke, and John. And so the youngest one here, my wife chose the name as Dylan. And at first we were going to call him Luke. And these guys freaked out. They said, I don't want baby brother to be named Luke. I want to name Han Solo. Yeah. Too funny. I love them, man. They're like sons to me, you know? Just kidding. No, enjoy every second you guys have with your kids. Because by the time your kids are 12 years old, you already spent apparently 90% of the time you'll ever spend with them. Yeah. Although it's a bit different in my family because we do have forced family fun on weekends. Yeah. And that's what a corporate picnic is, by the way. I hated that when I worked in big companies. When you have to go to corporate picnics, like they're doing you a favor. Hey, come over to the boss's house and see how much he's underpaying you because he has all this stuff. You know, and I used to call those things forced family fun. And I remember one time, one of my kids, I'm not going to say which one, we were in the car going to forced family fun meeting at my boss's house. And I told one of my kids, actually all of them, when you get there, you look him in the eyes and you say, very nice to meet you. And you don't say anything else. And so one of my kids, when the picnic, the event started, this is my son, he shook the hand and he said, very nice, pleasure to meet you. And I was like, yes. And then he followed up with this, pleasure to meet you, you big fat old man. I swear to you on the Bible that happened. And I was mortified. But I can laugh at it now. Forced family fun. Yeah. And the worst thing is you go to your boss's house, right? They're doing you a favor. Oh, look how much money I have and I'm underpaying you. And then your boss does something like this. They put their arm around you. They say, you see this Mercedes right here? If you work really, really hard, like really hard in the next 12 months, I just might buy another one for myself. And I hope that motivates you all to start your own company. If you want to start your own company, go to the link in the description, set up a call with my team, and I can walk you through it. Yeah. And if you're feeling frustrated, and I say this with love in my heart, guys, if you're feeling frustrated at work right now, good. Because that frustration will force you to either get another job making 50% more, Or better yet, start your own company. There's nothing worse than spending the rest of your life being someone else's bitch. I don't want that for you. I've been bullied in big corporations. So how can you change this? Well, fuck, just write a business plan on the side. And the way you know you have a good business plan is if you finish it. Okay, great. So you started your side hustle. What do you do now? Well, you run it on the side carefully. And if your 6-month trailing revenue from your side hustle is greater than your annual salary, quit. Take that chance. Keep writing business plans until you find one that works for you. You only have to be writing business one time. And let me be the catalyst to humbly help you with that. Let me help you break free from corporate politics. Yeah. All right. Do you believe current corporate leaders reflect on how changing dynamics impact younger generations entering the workforce, given the rising expenses and limited wage growth? I feel really bad for the younger generation. It's not fair. If you go back to 2008, when we were within 24 hours, the bank machine's not working. You know, the government created the stimulus program to bail out the banks. And the younger generation, rightly so, referred to this as a steal from us program. And this might be the first generation whose standard of living could be a little bit worse than their parents. Now, one of the things I love about the younger generation is they don't want to be a corporate slave. They don't want to work at a company. And a lot of the younger people I work with, actually, they have multiple jobs. And that's the right way to be. You know, for a diversification perspective, getting all of your income from one employer is stupid. Okay, or less logical, I should say, humbly. You should work for many people at the same time. Side hustle, side hustle, side hustle as well. And start your own company as well. Yeah. And the great thing about the younger generation, I look at my kids as well, right? So my kids grew up on YouTube, right? And what that means is they all sort of have an MBA in marketing. You know, for 18 years, when you're 18 years old, you grew up with YouTube, social media. You have an MBA in marketing. Start your own company. Let me be a small part of your success. If you guys have questions about businesses you want to start, let me know here. Let me humbly help you. Yeah. All right. My kids don't even know what the word pension means. Like, nobody sticks with one company forever. Everybody's goal should be to run their own company. Yeah. Even if you have side hustles. And the best investment for my students is this. And I feel very strongly about this, okay? I think real estate is your best investment, okay? And one of the many courses I have exclusively on my website for my clients is a complete real estate course, okay? And I don't care if you buy this or not. Let me just walk through it, okay? So what I want you all to do is, if you can, own your own house or apartment. It took me until my 30s. You know, I bought in New York. It took me a while, you know, to make some money to save up. I bought right after 9/11 because nobody else would, okay? But what I want you to do is, I want your 10 to 15-year goal to be to own residential investment rentals, okay? You buy places, you put down 20% if you can. You rent it out so that the rent is higher than the mortgage payments monthly, okay? And then you're going to get a ton of tax incentives. You get to deduct depreciation, right? You also get to, deduct an unlimited amount of interest on the mortgage if you rent it out, okay? If it's a separate company you set up, right? And the ideal investment in real estate, IDEAL, involves I for income, D for depreciation, E for equity, A for appreciation, L for leverage. Watch this here. This is cray. I'll do this quick. Okay. Hold on one second. Let's say you spend $2,500 a month, every month, on rent for 50 years. You don't buy. And let's say that the real estate goes up 12% per year, including depreciation, expenses, etc. How much do you think $2,500 per month over 50 years at 12% equals? Well, if we do the math on this, and this is going to blow you away, okay? It's going to change everything. 12 times 50 years. Okay, so right there we see it's $1.5 million you're paying. Watch this though. If you get 12%, which is, I know, aggressive, but I want to prove point, okay? That dollar amount in 50 years, watch this, is $97 million. Watch what happens if it goes to 15%, which is unrealistic, but watch that number. It now goes to, come on, $344 million. Really? From an extra 3%? Wow. I want you all to own real estate and rent it out. And the first televised debate between Hillary Clinton and Donald Trump, I remember Hillary Clinton said to Trump, it's not fair. You're not paying as much taxes as you should. And he was very transparent. He said this. He said, of course not. I own real estate. I get to depreciate. That means you pay less in taxes. The richest people on the planet own lots of real estate. I want you to own a lot of real estate as well. So set a goal of 10 to 15 years to replace your base salary with income you're going to get from your rental properties. Okay? It's tough to come up with the 20%. I get it. What I do is this. I own houses, right? In a couple countries. I have a property manager, and the property manager takes care of everything for me. So maybe I pay them 10% per year of what they collect, but that makes sure that, you know, every single month is rented, there's no vacancies, etc. Yeah. Your goal should be to have your own company always. Because when you have your own company, you get ridiculous tax benefits. You know, in the United States, the corporate tax rate is 21%. You pay more than 21% taxes, right? So the system is telling you start your own company. Start side hustles, but write the whole business plan first. Because failing to plan is plan to fail. Okay. Okay. All right, next up, Xander wrote, what do you think of Ethereum Treasury companies as compared to owning Ethereum ETFs or Ethereum itself? Yeah. I don't know anything about Ethereum Treasury companies. I do own Ethereum myself, and I publicly disclose what 4 cryptocurrencies I own many, many years ago. You know, I've owned Bitcoin and been in Bitcoin since 2012, 13, whatever. My target price on Bitcoin is $1 million. I don't know the path. I don't care, but I know the destination. Okay. I don't care if it gets cut in half tomorrow. I don't care if it doubles tomorrow. I'm long-term focused. The 4 cryptos I own are as follows. Do your research first, please. Bitcoin, Ethereum, Litecoin, Ripple. The one thing I don't like about Ethereum, and I own it, but the one thing I'm not comfortable with is the fact that there's no limit on supply. What I like about Bitcoin is that there will never be more than 21,000 Bitcoins ever created by the year 2140. What I like about Ethereum, why do I own it, is because it's a quintessential, blockchain platform to the extent that a lot of NFTs are created on that platform. A lot of ICOs, which are like IPOs but for cryptocurrencies, are done on the Ethereum platform. Yeah. Okay, next question's from Akshith. Nice to meet you. First time seeing you. Hope you join us again. What does a CFA give me? Can it give me an edge in private equity? Please give me your opinion. Yeah, absolutely. So CFA stands for Certified Financial Analyst Designation. It's better than an MBA. It's better than an MBA if you want to work in finance because it teaches you a hell of a lot more about finance. It's a 3-year designation where you write one exam, on 3 nights over 3 years. The first year is basically a review of finance at MBA universities. Year 2 and then level 2 and 3 is more advanced. It'll help. It's very prestigious. The highest percentage per capita of CFAs on the planet is in Toronto, actually. Yeah. I like it. In terms of, will it help you with private equity? It will. It'll help you understand cash flow, EBITDA, and how to value companies. And it will look good on your LinkedIn profile, too. Yeah. Now, if you're going to do the CFA, do not buy the textbooks they recommend. Okay. When I did level 1 8 million years ago, they said, buy all these textbooks. It was like a lot. It might cost you close to $1,000 now. F that. You're going to buy Schweizer books. Okay, Schweizer, buy them on eBay, used for $50. This many books that summarizes everything so you work smarter, not harder. Yeah. And when I did level 1 exam, it was right after 9/11. I think it might have been early 2002. I'll never forget. And Goldman paid for it all. I worked at Goldman. We were all sent out from Manhattan to New Jersey to a massive warehouse. Thousands of us were about to write it. And then we all had to stand up. And we're like, why do we have to stand up? And the moderator said, before we start, we want to read out the names of all of the CFA charter holders that died on 9/11. And that list was forever, man. God bless them. Yeah. Okay, how the world has changed. Okay. The world is a safer place. Okay. Manas, right. Good morning, my dear mentor. Back in LA or New York from last week. Nice luck. Thank you. Yeah, it's nighttime here. Yeah. Okay. And if that's distracting, that light, let me know. I'm still testing this out here. Okay. Okay. Manas wrote, Intel got a lifeline from Nvidia. The latter knew they won't be able to acquire. 2 questions. 1, is Intel now more relevant owning to a stake in the U.S. government and Nvidia? And number 2, is Nvidia too big to innovate? Is it acquiring a ton of companies now? Yeah, a couple of things. It's fascinating. So what actually happened was Nvidia put $5 billion into Intel. I guess behind the scenes they're kind of partnering with the U.S. government. The U.S. government owns part of Intel as well. They're partnering with the U.S. government to say, hey, longer term, the chip sector is really strategic to national defense. And I think what this is going to do, this partnership is going to help Nvidia to get more corporate or more government clients longer term. Yeah. So I think it's incredibly bullish for Nvidia. It's obviously a great thing for Intel. So what happened with Intel? Well, Intel, the second a founder leaves a company, like all the founders leave, the company goes in a secular decline and you don't touch it. So the late, great Dr. Andy Grove, when he left, Intel became less relevant. But Nvidia is fine because the founder still runs it, Jensen Huang. And I remember it's so ironic because many, many years ago, Intel wanted to buy Nvidia, and there's no way the DOJ, Department of Justice, would let them do it. It's so ironic. So ironic. Yeah. Yeah. But if it were up to me, if I was the government of the United States and I set the tax code, I'd say for the next 5 years, all semiconductor and AI companies don't have to pay taxes. Crazy, I know. Especially for fabs, right? Like where they make chips and stuff, like Homer Simpson. Yeah, although that was nuclear, right? For strategic reasons, the United States cannot be dependent on Taiwan, Taiwan Semiconductor. Yeah, I think that we need to make many more fabs in the United States. Yeah, and let them be tax-free. Yeah. All right. Next up, Life wrote, when the interest rates go down, stock market goes up. Similarly, is there any relation how cryptocurrencies and share market or interest rates? How do cryptos rise? Yeah, absolutely. So what typically happens is this. If interest rates go down a lot, then people are like, why would I leave my money in the bank? I can barely make a return on investment. Interest rates are low. Therefore, I guess I have to buy riskier assets like stocks, cryptocurrencies, etc. And, in early 2020, when people were freaking out during COVID, what the government did was they cut interest rates to basically zero. And what that did was it caused people to say, oh my God, what do I do now? I mean, I'm not earning any money, interest rates on my money in the bank. I guess I'll buy stocks and maybe these risky meme stocks. Screw it. I'm not making money anyway. Leave my money in the bank. Maybe I'll buy NFTs. Maybe I'll buy baseball cards, right? Like this one here. If this was not a reprint, this is original in this condition, might be worth close to $10 million. But low quality assets go up in value big time when interest rates are zero. And that's why the government cuts interest rates, to help prop up the economy as well. You spend more money as well when interest rates are low because you're de-incentivized to keep your money in the bank. And the problem is, and I guess I have to get off green screen for this bad boy here. The problem is, since 2020, the U.S. government has printed 50% more of this stuff, close to that, than they have now. It's not fair, is it? Well, whenever supply of something goes up, right, what happens is demand goes down. So if supply of this goes up big time, what we're doing is we're all being forced to invest in other asset classes. Yeah, that's how it works. Now, conversely, if you go back to 1980, roughly 1980, the Fed chairman at that time was named Volcker, God bless him, he passed away. But interest rates and inflation were closer to 20% then. It was a terrifying time. Inflation was brutal then. As a result, the stock market sucked. And as a result, No great companies, or hardly any, were founded in the early 1980s. Why would anybody invest in venture capital when you can leave your money in the bank and make like 15 to 20%? So, yeah. The problem is if you cut interest rates to zero, then you can't stimulate the economy unless you issue stimulus checks or steal from us checks, as the younger generation rightly so refers to it. Yeah. All right. Okay. All right. Next up, $24 in 500 years at 7% will be $63 trillion or more compounding. This is the eighth wonder of the world. Absolutely. And in the 1600s, I think it was the people that first settled the United States, they sold the island of Manhattan for like, I think $24 to the U.S. government. And people thought, oh my God, I can't believe they sold it for that small amount. Really, I can own all of Manhattan for $24? Well, if you put that $24 in the bank over hundreds of years at that return rate you mentioned, then that $24 is worth more than the property in Manhattan and every building in Manhattan and every car in Manhattan. It's ridiculous. Compounding really adds up. It's really interesting. Like the best way to explain how crazy compound interest is using this example right here. All right. So if I took a piece of paper, okay, and I folded it in half a couple times, it's thicker, right? Of course. Now, if I folded it in half 50 times, don't look this up. If I folded this in half 50 times, how thick would it be? Let me know. Tell me. How thick do you think it would be? Nope. Thicker. Keep guessing. Again, if I folded this in half 50 times, how thick would it be? 12 inches? That's a lot, right? You know what the answer is? The answer is it would be so freaking thick, it would go from here to the moon and back 200 to 300 times. It would be as thick as 75% of the distance between the Earth and the sun. That's how I want you to think of compounding interest. Okay. Big thanks to Tom Karadza from Rockstar Real Estate, a good friend of mine who told me that analogy. Okay. All right, give me 1 second here. And if I can't answer your questions here, I'll answer them on my weekly Zoom call with my paying client at 10 a.m. Yeah. All right. Next question is the Fed rate cut. What is your estimate of the rest of the year? Yeah. So I think there might be another 2 Fed rate cuts later this year of 25 basis points each. Yeah. And I'm not going to get political on this one. Yeah. But the way it works is I think there's 12 Fed governors. Okay, so Powell heads up the Federal Reserve. He won't be there much longer. In 2017, Trump appointed him. Oh my God, I said I'm not getting political. In 2017, the head of the Federal Reserve, Powell, was appointed by Trump. But his contract's not going to be renewed in the next 6 months or whatever it is. But the way it works, the Federal Reserve, is every couple of weeks they have these FOMC meetings, which means Federal Open Market Committee meetings. And there are 12 board governors in the Federal Reserve, one of which is Powell. He heads it up. And all 12 of these people have to vote. Is it 11 or 12? I can't remember. But all 12 of these have to vote, and they all have equal number of votes in order to decide what should happen to interest rates. Now, one person on that committee that was just appointed by a certain administration, the Republican administration, wanted a 50 basis point cut, right? So it kind of got skewed a bit. I'm not going to talk about politics. Yeah. But I think cutting rates is the right decision right now because the labor market is weakening. Yeah. All right. Realist wrote, almost 40 and many in my age. We've just been grinding. Yeah. It's hard. It's not your fault, man. It's a set of cards you were given, in 2008, etc. Yeah. And it makes me so mad. It makes me so mad that the government bailed out the banks in 2008 And these bankers pay themselves record bonuses 2 years later. Meanwhile, the average person in America, a lot of people in middle America, lost their houses all over the country. Where's their money? Why can't the government, I'm a capitalist, right? Why can't the government tax these big banks $1 trillion over 10 or 15 years? And the amount of money they put in goes to people who lost their houses then. And it's not fair because we have a lost generation that couldn't get jobs then. It's not fair. Yeah. But it's not too late. If you want to reskill, take online courses. Don't take mine. Take anybody's. I don't care. And then network like crazy. Okay? You can always reinvent yourself at any age. Yeah. All right. And then you wrote, I have things that in a few years I dreamed of, but now I don't care anymore. I have resources to thrive. I just can't move forward. I feel your pain, man. Let's start over. We can all do it, starting now. Tell you what, anybody interested in learning more about my program, I don't want to turn this into an infomercial, but I do care. I fucking care a lot. Go to this website, harounventures.com, and at the bottom, I'm covering it up sort of. It says book a meeting. Book a meeting with my team, see if we can help you. Okay? And everything I do, there's a 30-day, 100% money back guarantee. So again, go to harounventures.com. And at the bottom, there's a blue button that I think we're covering up here. That says book a meeting. Okay. Yeah. And our program, the way it works is there's a 30-day, I think it's 30-day, 100% money back guarantee. Yeah, that's right. It's 30 day. Yeah. So just book a call with my team and see if we can help you. Yeah. It's an investment though. Like you have to invest in yourself. Yeah. Okay. All right. Let's talk about this for a second. If people are unhappy with what they're doing, what I recommend that you do is this. Okay. Step one, make an amazing LinkedIn profile. I help you with that. I write it myself if you work with me closely, right? Step one, make an amazing LinkedIn profile. Step two, set up networking meetings with people that work in different sectors that have something in common with you. Okay. And don't just apply to jobs, because every time you see a job opening, you have a 1 in 250 chance to get a job. Who gets a job? Well, it's somebody that knows someone at the company. Great. These are the rules. Network to know people at the company. So how do you do it? Well, let's pretend it's 20 years in the future and you're way more successful than you already are today. Okay. And somebody reaches out to you, it's younger than you. And they reach out to you and they send you a LinkedIn email. And they say, John, for example, hope all is well. I also went to the Toronto French School, which is where I went to school. I didn't speak English in school until the 4th grade. I also went to the Toronto French School. I'm also from Mississauga, and I also went to McGill University, and I live in the Bay Area. Please let me know if you have time for a coffee or a Zoom call. I would take that meeting because that's me 20 years ago. Wouldn't you want to help yourself 20 years ago? Of course you would. So set up those Zoom meetings. Make an incredible LinkedIn profile. Okay, reach out to people. Don't say why you want to meet, and there's nothing unethical about that at all. Just say what you have in common. You'll be amazed. People will take the meetings. And if I told you if you did that 100 times, that you would get the job of your dreams, would you do it? You're fucking right you would. So make it happen. Now, if I told you that if you set up 100 meetings, 100 emails like that, and the 100th person answered and the first 99 did not, and you get the job, would you do it? Of course you would. Make it happen. You know, networking is like dating. I've had a lot of buddies, that aren't that good looking, but way better looking than me, of course. And they've always had the hottest girlfriends. And the reason is because they ask over and over and over and over and over again. Never give up. Be a pit bull on a pork chop. Yeah. And I do have to wrap up this call very soon, but I'll see how many more answers or questions I can answer. Ooh, that's pretty close up there. Let me get far away. Yeah. Yeah. And by the way, so I had more women check me out during COVID. And the reason is, okay, I can't believe I'm going there. Usually I'm an ugly guy, right? I don't do well. Yeah. My wife's way out of my league. The reason was during COVID, I had that mask on and nobody could see this massive nose. It's so big that I run out of this stuff like every week because this thing, it's giant. Oh my God, the green screen doesn't even work. It's so big. And so I had this mask on. And so people kind of look at me, you know, but once the mask came off, they're like, oh my God, he's a scud. Yeah. Okay, I talk too much. Just be yourself. Everyone else is taking it. Okay. All right. Let me move on here. Manas wrote, everything I know of and do and have been working on is because of you. Thank you so much for everything, for being kind enough, long time here. Fun to be here with everyone who is smarter than me. No, dude, you're smarter than me. God bless you. Thank you for that. Yeah. Thank you. All right, Albright. And I met Madeline Albright, actually, in my office years ago. And her daughter, actually, she runs a not-for-profit here in the Bay Area. Her daughter's wonderful, yeah. So Albright wrote, Bitcoin or a house. A house, without a doubt. You need to, yeah, if you don't have a primary residence, if you're paying rent, without a doubt, a house. And yes, I think Bitcoin's going to $1 million one day. But I don't want that to be more than 5% of your portfolio. Okay, just from a risk management perspective. With Bitcoin, you don't get tax breaks. You do with a house, right? If you rent out to other people. You can't depreciate Bitcoin. But if you own rental properties, you rent it out, you can depreciate that as well. So with a house, if you're renting it out, you get multiple tax benefits, including number one, depreciation. You can't depreciate Bitcoin. Number two, you can write off the interest on your mortgage as well if you rent it out. And if you live in America, you can write off the interest on your primary mortgage for your primary house. Don't ever pay off your mortgage, folks. Why? Because you can write off the interest in the United States, at least, and Switzerland, and one or two other countries. Yeah. Okay, and then Smart Order Flow Trades wrote, can you be my mentor? I'd be happy to. You wrote, this is my WhatsApp. I'm happy to answer questions here. I just don't have the bandwidth. I'm so sorry, but I love you. Yeah. I have 2 million ping students every country. I can't do it. Yeah. But I can always virtually mention you on this weekly call. Ask me any questions as long as you want to, forever, for free. Yeah. And we are building a school in Ghana as well. Okay. Give me 1 second. Yeah. Manas wrote, political associations and beliefs are private things, better to hide it. Nice advice. Yes. Dude, everybody go to your LinkedIn profile. Please remove every politician or anybody you follow, okay, that leans left or right. It's just not worth it. You know, these are interesting times. Yeah. I believe in freedom of speech, but I don't believe in hate speech. Yeah. And I don't believe in celebrating somebody's death. You know, I don't care if you're a Republican or Democrat. It's immoral. And what precedent does that set? You disagree with somebody, so you can, yeah, no. And then Albright, oh, interesting. Albright wrote that the hate speech comes from bots. Just ignore them. Yeah, sometimes I think to myself, all this hate speech on TikTok, is that a foreign government creating that to split this country apart? Is it the Russian government creating some of these hate comments to make the left go more left and the right go more right, to create civil war? I don't want to go there. Yeah. But something needs to be done about hate speech online. Something has to be done. Like, I think there should be an algorithm, you know, within TikTok, that if somebody says something hurtful, like really, really hurtful, like physical harm, they're banned from the platform. Or you have a strike system like on YouTube. 3 strikes and you're out. Yeah. But there is a fine line with freedom of speech. And I'll give you an example. So 2021, okay, and I am so transparent to a fault, okay? But transparency builds trust. 2021, a doctor who's one of my clients came on to an unlisted webcast, just a couple of us there. And he expressed his opinions why he did not believe in vaccination. Sound logical. I got vaccinated. I got the Pfizer one. But he expressed his views. And what happened was I got a warning on my channel. And that video was taken down. And the warning was medical misinformation. I appealed it to no avail. And I thought, this is not fair. You know, in a couple of years, the world's going to change. I think this is too far-fetched. And I realized then that freedom of speech is supposed to be a government thing and not a corporate thing. And then eventually, they removed that warning, but they made me take a test. Like, I had to answer medical questions and all that stuff. I was like, what is this, the thought police? And eventually they removed that as things changed. Yeah. All right. Next up, Matt wrote, Chris, if as a society we continue to overly avoid discussing politics, do we risk increasing the lack of education and knowledge of how politics and economics function? Yeah. I believe in freedom of speech, but I don't believe in hate speech to the extent that it causes physical harm. Something needs to change about that. Maybe there's an amendment to the Constitution. I know the First Amendment is freedom of speech. I get it. But maybe there needs to be an amendment to that where freedom of speech is acceptable, except in the cases where you cause physical harm. That's fair, isn't it? Okay. Next up, Manas, who's based in Calcutta, where one of my heroes lives, or used to live, Mother Teresa. Manas wrote, BYD, the Chinese automaker that's better than Tesla, is blocked in India and America only. Oh, I didn't know BYD is not in India. Maybe, but soon they will be in India. I'm shocked they're not in India because I know India's gotten closer to China and Russia too. Yeah. Maybe soon they'll be in talks to progress. How will Tesla win if it loses a big market like India, 1.4 billion people, biggest youth market ever? Yeah. It's a huge loss. It's a huge loss. And BYD is going to be bigger than all other auto companies combined at some point in my life. It's going to happen. And we're going to start seeing more BYD cars in America. I haven't seen one yet. Let me know if you guys have. Anybody in Europe, let me know if you've been in one and what do you think of it. But I think a lot of people are going to, buy BYD cars in Mexico and drive across the border. Yeah. This company is unbelievable. It's going to be the biggest market cap in the world one day. And there's a reason why Warren Buffett many, many years ago started to invest in BYD. He's no dummy. Yeah. Yeah. And I wouldn't invest in Berkshire after this year, only because the founder CEO, Warren Buffett, is leaving. Yeah. Only invest in companies where the founder CEO runs it. All right. Next up, hey, Sharif, how are you, bud? Good to see you. Wrote, what do you think of Robinhood? And what do you think of their model and tools? They've recently announced a slew of new products and features that seem to really democratize investing analysis. Yeah, so I had talks with them. They wanted to license some of my products for 6 figures per year. Decided that we cut talks and stuff. I don't use Robinhood. When I invest, I use bigger financial services companies that I think are too big to fail. And so earlier on in today's webcast, I mentioned maybe it makes sense to only put your money in the bank and, partner with banks that are too big to fail, meaning the 5 biggest banks in the country. Those are just my humble thoughts. Yeah. But I am happy they exist because, they basically influence the marketplace to cut commissions to basically zero. Competition is a good thing for the consumer. And I don't feel comfortable with what Robinhood did in Q1 of 2021. January 2021, GameStop went up 29.4 times. And some people were not allowed to transact And I just don't trust that platform. Yeah. Do a search on it. This is all publicly disclosed. Okay. A couple minutes left here. If I don't answer your question, save them for next week. All right. Manas wrote, why do so many finance legends like Jim Simons and so many others have awful family life and broken relationships? Money is not fixed. Everything does it. Yeah. A lot of billionaires are not as happy as you think. You don't think that money is going to make you happier, guys. The problem is a lot of billionaires, there's as Gordon Gekko was told by Bud Fox in the movie Wall Street in 1987, how many yachts can you water ski behind? They want more and more and more and more and more. And if you always want more, you're never happy. You're never happy. And your kids aren't happy. I went to Colombia with tons of billionaires' kids. They're not happy. I've known a lot of billionaires. Some are not happy. And a lot of the most successful people in investing are incredibly unemotional. They're so unemotional that they can't have a good family life. Now, it's great to be unemotional about business because that way you don't sell at the worst time and buy at the worst time. You're rational. That being said, if you're incredibly unemotional, it's hard to have a relationship with a human being if you're unemotional. It just might not work longer term. Yeah. And one of the 10 commandments, here I go. That's right. One of the 10 commandments is, don't have any false gods. Like, don't worship money. You'll never be happy. And the Dalai Lama, who wrote this great book you all should read, called The Art of Happiness, he said the problem with Western society is we sacrifice our money, or we sacrifice our health our entire lives to make money. And at the end of our lives, we sacrifice all of our money to maintain our health. And then we look back and we realize we never really lived to begin with. Be happy today. We all need to eat, yes, and we all need to make money. But don't ever sacrifice your time with your loved ones to make more money than you think. And always try to live below your means, guys. And there's 2 books I want you to read or listen to the audiobook version. And this will change a lot of stuff for you. Okay. Those 2 books are number 1, The Millionaire Next Door. And number 2, The Wealthy Barber. And these 2 books, The Millionaire Next Door and The Wealthy Barber, are about people that live below their means. Okay. Retail therapy doesn't work. Unless you're buying GTA 6, okay? Then it works. Every day, all day, forever. Okay. Jim Simmons, by the way, smoked his entire life, but God bless him. Yeah. All right. Next up, Manas wrote, I had a strange question for you. Take your time when forecasting revenue for 10 years. Do you forecast it the same way you would a small cap, mid cap, or large cap? Will you forecast AMD and Figma at 10%? Yeah. So why don't you show me in the Zoom meeting that we're going to have in 7 minutes, as you're one of my premium customers, and I can help you with that. Yeah. But I want you to create your own financial model and then show me. Yeah. All right, guys. All right. Somebody said, what are your thoughts on the company HCA? I provide you with all the tools to do your own investment research. Yeah. And even if I told you to buy or sell that stock, don't listen to me or anybody. Always do your own research. Yeah. And the way you can do your own research is I provide you guys with so many frameworks. Real estate frameworks, stock frameworks, options frameworks, frameworks for interviewing. Like if you want to work in the finance sector, give me 1 second. Let me go here too. Here we go. You want to work in the finance sector, I provide you with frameworks and 150 pages of questions, and I help you answer them, etc. Right? So I provide you with all the tools you need to be extraordinarily successful. Yeah. And they say, I have a prop for everything. This is so silly. I think it broke. Oh, it broke here. Okay. Alexa, stop. Teach a person how to fish. Give a person a fish they eat. They have one nice meal. Teach a person how to fish, and they eat for a lifetime. Yeah. God, I felt like George Bush Jr. in that when he said, "Fool me once, shame on you. Fool me twice, you won't get fooled again." That sounded like Obama. Yeah. All right. I do have to wrap up this call in a second. Let me go to my GTA background. Okay. So Maz wrote, sick background. Thank you. Thanks. Okay. All right. Next question is, what is the point of university and colleges and Ivy Leagues if both jobs will be AI? And also, what is the point of learning tough code and engineering when Tesla, Optimus, and Claude can produce tons of code? Yeah. So we always adapt, okay? We always adapt. We always will. Don't worry about technological changes. Don't listen to the media. They freak out. They freak out about everything. Why? Because they know you're not going to watch after the commercial unless they say, find out why the world is going to end because of AI after this commercial break. Just learn how to use AI to be more productive yourself. Yeah, that's it. Don't worry. We always adapt. I remember back in the 1980s, Japanese companies were very, very strong then. And actually in the 90s, the real estate value in Tokyo itself was greater than the real estate value of the entire United States. And Japanese companies kind of pioneered, along with Edward Deming, automation and robotics. In factories. And I remember back then people were saying, oh my God, robots are going to destroy the global economy. Great Japanese companies like Fanuc are going to be able to figure out how robots can do everything we do. Don't worry. Don't worry. We always adapt and we always will. Yeah. I'm incredibly optimistic about the future. Yeah. Okay. In terms of university and colleges, I mentioned this earlier. I really do believe that my kids are the last generation that feel that maybe they should think about university. But nothing you learn in university can help you to the extent that learning stuff online can. Like, I can't believe that university and the top MBA programs don't teach you the following: how to start a company, how to manage your personal finances, how a mortgage works, how to sell, how to get a job. That's important, right? How to interview, health management, personal growth. Like, it's ridiculous. And I teach all that stuff and way, way more in my 600 hours now MBA program. It keeps growing, available exclusively on my website. Just go to the link in the description if you want to learn more on all that stuff. Okay. Okay. All right, next up, Sasaki. Hajime mashite. Yeah. Yeah. My humble question. And by the way, this Christmas, I'm going to Nintendo with my wife and my 3 boys. And we're going to go to Nintendo World as well in Osaka. And I can't wait. I mean, they can't wait. Yeah. You can see right through me. Look at that. Blue screen here. Sorry. Okay. All right, guys. I do have to wrap this up. But the question is, my humble question. If the tech stock bubble bursts and margin calls are triggered, do you think the forced sales will spread to non-tech stocks, and to what extent? Yeah, absolutely. More than 30% of the S&P 500 is technology stocks. Okay, it's by far the biggest sector, up from just over 20% 3 or 4 years ago. Right? So if tech stocks get murdered, everything gets murdered because, perception becomes reality. People freak out. Kind of like up until 2008. Up until 2008, 40% of corporate profits for all companies came from financial services companies. When financial services companies blew up, more of an impact, obviously, financial services than tech does in the economy. But, all ships rise and all ships fall. Yeah. Yeah. But I don't really care about that because I'm very long-term focused. Okay. I see there's tons more questions, guys. I will see you guys next week. If you want to join me, you get daily group Zoom calls with me, one-on-ones, all that stuff. Just go to the link in the description of this video and set up a meeting, please. And I'm going to end this webcast like I always do with a life-changing, very short interview with Steve Jobs that I licensed from the Silicon Valley Historical Association. God bless you. Thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.